Back in 1899, Coca-Cola figured out something that changed business forever. Owning factories is a burden, it's expensive, it's risky, and it limits your growth. So Coca-Cola did something completely crazy. It stopped manufacturing its own product, sold off its production plants, and handed all the heavy work to independent partners. Fast forward to today, and that single decision built one of the most unstoppable empires on earth. Coca-Cola generates over $47.9 billion a year, operates in more than 200 countries, controls 43% of the global market, and sits on a mind-blowing $346 billion market cap, printing reliable dividends year after year like clockwork. But behind this massive success lies a mind-bending truth. Coca-Cola doesn't sell a single bottle, not one. Instead of spending billions on factories, trucks, and fridges, Coca-Cola runs a brilliant asset-light model. It only sells the secret syrup to local bottlers at huge margins, leaving everyone else to pay for the heavy machinery. How did a simple syrup company trick the entire world into financing its global empire while keeping the secret formula and collecting all the profits? And how can a business grow into a $300 billion empire without owning the factories that make its product? In this documentary, we will analyze the genius of the asset-light model, the financial mechanics of bottling contracts, and the strategy that built Coca-Cola. It all started back in 1886 in Atlanta, Georgia. A simple pharmacist named John Pemberton created a sweet syrup made from coca leaf extract and cola nut, selling it as a medicine for headaches and fatigue. But after Pemberton passed away, a brilliant businessman named Asa Candler bought the full rights to the syrup and founded the Coca-Cola Company. Candler owned the secret formula, but he faced a massive problem. He wanted to conquer the entire American market, but building factories, buying trucks, and hiring workers across the nation required millions of dollars he simply didn't have. Then, in 1899, the ultimate breakthrough happened. Two ambitious lawyers walked into Candler's office with a crazy proposal. They offered to build the bottling plants themselves if Candler gave them the rights to bottle and sell the drink. Candler, who believed the future of Coca-Cola was strictly at soda fountains, famously sold them the global bottling rights for just $1 single. Without spending a dime of its own money, Coca-Cola unlocked a money-printing machine. Independent investors poured their own capital into land, machinery, and logistics, while Coca-Cola simply manufactured the secret concentrate syrup and sold it back to them at massive margins. The bottlers took all the operational risk, while Coca-Cola focused 100% of its time on the thing that actually mattered: building an iconic global brand. When World War II broke out, Coca-Cola turned a global crisis into the ultimate expansion strategy. The U.S. government deemed Coca-Cola essential for troop morale, promising that every soldier could buy a bottle for 5 cents wherever they were stationed. The military effectively funded the construction of dozens of bottling plants across Europe and Asia. By the time the war ended, the American government had unintentionally handed Coca-Cola a fully functioning worldwide distribution network for free. With its global supply chain locked in, Coca-Cola doubled down on pure marketing genius. They didn't just sell a drink, they sold happiness, optimism, and lifestyle. They redefined Santa Claus in their holiday campaigns, sponsored the Olympic Games, and ran iconic commercials like "I'd like to teach the world to sing." To dominate every corner of the beverage industry, they launched a massive acquisition strategy, snapping up brands like Fanta, Sprite, Minute Maid, and Schweppes. Between 1881 and 1997, Coca-Cola pulled off one of the greatest financial explosions in Wall Street history. The company's market valuation soared from just $4 billion to a massive $150 billion, officially making it the most valuable company on the entire planet. With a massive 44% market share worldwide, operations expanding into over 200 countries, and the largest, most profitable bottling network in human history, Coca-Cola established itself as the undisputed ultimate leader of the global beverage industry. But right at its peak, the asset-light model cracked. In the late 1990s, rising costs for fuel, aluminum, and plastic, combined with a brutal price war from Pepsi, pushed independent bottlers to the brink of bankruptcy. To save its distribution network, Coca-Cola made a desperate move. It abandoned its asset-light strategy and spent billions buying back struggling bottling plants. Overnight, the Agile Syrup Company transformed into a heavy, low margin industrial manufacturer. Profit margins crashed, debt exploded, and Wall Street panicked, leaving the stock stagnant for over a decade. Coca-Cola realized it couldn't survive as a heavy manufacturer. In the 2000s, executive leadership executed a masterstroke comeback strategy called refranchising. Instead of holding onto the factories, Coca-Cola spent years modernizing the plants, consolidating small operators into regional powerhouses, and then sold the factories all over again to mega bottling partners like Coca-Cola Euro-Pacific Partners and Coca-Cola FEMSA. They completely wiped billions of dollars in heavy physical assets off their balance sheet, returning 100% to their pure asset-light model. The turnaround was immediate. Operating margins surged, free cash flows surpassed $10 billion a year, and Coca-Cola proved the ultimate rule of business. You don't need to own the factories to control the world. And that is the true genius of Coca-Cola. By focusing purely on what matters most, the secret formula, the iconic brand, and high margin syrup, they built a massive global empire that generates billions without ever needing to manufacture a single bottle. If you enjoyed this video, hit that like button, subscribe for more business breakdowns, and drop a comment below.